What you invest your money in depends more on your goals than on your age. You see, no matter what point you are in your life, no matter how old you are, it doesn't matter because each person has their own unique personal financial goals. Some people want to take more risk. Some people want to play it safer and be smarter with their money. Some people want to retire as soon as financially possible, and some people don't. So no matter how old you are or what your financial goals are, I could argue that you could be investing in stocks, dividends, mutual funds, ETFs, or bonds. It all depends on you and you alone. Hey guys, welcome back to today's video. Hope you had a wonderful, wonderful day. In today's video, I'll be discussing stocks, bonds, and funds, and help you figure out where is the best place for you to invest your money. And that brings us to the most important question of today's entire video, and that is, are you subscribed to my channel? If you're not, please subscribe, and in exchange, I'll give you 2 free stocks. You can find those in the link in my description for Robinhood and for Webull. Actually, you could get those free stocks just by using the links. You don't have to subscribe, but it would mean a lot to me if you did subscribe to my channel. Anyways, let's not waste any time and let's jump right into it. Did you know that the US bond market is worth $43 trillion and that the US stock market is worth considerably less than that at $34 trillion? That surprised me because I really thought that the US stock market would be worth way more than the US bond market. But nope, you probably already know what stocks, bonds, and funds are. But let's get down to the basics and I'll explain to you what they are and how they work. Stocks are a share of ownership in a company, and with the stock comes a great deal of uncertainty and risk with future returns. When you buy a stock, you're essentially betting that the company will grow and succeed in the future. Because if they don't and the company fails or the stock price goes down, you have the potential of losing all of your money with no guarantee of getting paid anything back. Now, my favorite types of stocks are dividend stocks, and this is because they provide a consistent and reliable stream of income. The one downside to dividend stocks is that the company can decide to take them away at any point. This rarely ever happens though, because once a company declares a dividend, they're usually going to stay and stick with that dividend for as long as they can. It would be a very last resort if they ever took away their dividend. Stocks are generally riskier and more aggressive than bonds, but with that higher risk also comes a potential for higher profits and higher growth. And that means we can spend more money on dumb stuff. Well, probably shouldn't spend your money on dumb stuff, but there is that potential to make more money with stocks. I think stocks are great and they should be included in anyone's portfolio, in particularly dividend stocks, because dividend stocks provide that consistent stream of income, and who wouldn't want a consistent stream of passive income? You know, just sitting there at your desk, on the couch watching TV, getting paid money, who wouldn't want that? In my opinion, if you diversify and buy a number of dividend-paying stocks, that is probably one of the best ways to invest your money. And if you'd like me to show you my dividend stocks and my investments in Robinhood, I could pull that up in another video. Just comment down below if you'd like to see that, and I can show it to you next time. Now, for something a little safer and a little more secure, let's talk about bonds. A bond is a contractual obligation of an issuer. The issuer can be either the government or a company, and what it is that they are legally obligated to pay you back. The way it works is you lend them money and they pay you back with interest. So, for example, with the government bond, you're essentially lending the government money and they're required to pay you back. And with a corporate bond, you're essentially doing the same thing but with a company. You lend the company money and they pay you back in the future with interest. Same way as a government bond works is the same as a corporate bond. And each bond has a different rating, and that depends on how creditworthy the company or government is. So what this does is it means that if a company isn't as creditworthy as another, it'll have a higher rate of return. Because essentially, what it's saying is that it is not as likely to pay you back the money. That's why it's not as creditworthy. In addition to how creditworthy the company is and the rating of the bond, another thing that determines the rate of return on the bond is how long the investment is. Because if you only had a bond that was 1 day, which would never happen, but if you had a bond that's 1 day, you don't need to be paid as much in interest because you know that you'll get the money back the next day. But if it's a 30-year bond, who knows what could happen in those 30 years? There are 3 reasons to buy a bond. 1 is for income, 2 is for diversification, and 3 is for safety. Income comes from bonds in the form of coupons. And what coupons are is they're essentially the annual interest of the bond. Bonds generally pay semi-annual interest. And at the maturity of the bond, when the time period is up, they pay you the face value of the bond. Bonds are generally a great way to diversify your portfolio because typically they move in opposite directions of the stock market. If stocks are going up, bonds probably aren't doing as well. And if stocks are going down, bonds are probably doing better. It doesn't always work this way, but it does most of the time. Finally, bonds are simply a safer investment because a bad year in the stock market looks nothing like a bad year in the bond market. A bad year in the stock market will be much, much worse. So essentially, having some bonds could be really good for your portfolio because it provides a consistent stream of income and it's much safer and helps you diversify your portfolio. But honestly, what I like to do is I focus on dividend paying stocks because they still provide that consistent stream of passive income, which everyone loves, but they also have the potential to grow and appreciate in value from simply the stock price. And bonds, they can't do that. Next up is something that is more risky than a bond, but less risky than a stock, and that is called funds. There are 2 types of funds that we'll talk about, which are mutual funds and ETFs. ETFs stand for exchange traded funds. And essentially, funds are where money from a number of investors is collected and pooled together to be invested in a number of different stocks. So by investing in a fund, you're essentially investing in hundreds of stocks that were professionally picked by investors. Owning a fund gives you immediate and instant diversification, and it also gives you professional management of your money, which is great. The one downside to investing in a fund is that you don't have control over which stocks you're investing in because whoever manages the fund and whatever company manages the fund, they decide what companies and what stocks that the pool of money should be invested in. There are pros and cons to owning stocks, bonds, mutual funds, and ETFs. But for most people, I think that the best way to invest your money is to invest in mutual funds or ETFs. And honestly, this is what most people do because it is the easiest way and offers immediate and instant diversification of your money while still offering the upside of the stock market. When it comes to investing, there are so many ways that you can invest your money. You can have a combination of stocks, bonds, mutual funds, ETFs, combination of everything. But when I'm investing, I like to see a consistent source of passive income from either dividend stocks, from dividend funds, from bonds. I like to see that consistent stream of passive income because honestly, who wouldn't like that? And I like to see what investments you guys like. So comment down below what your favorite investment is, whether that's a specific stock or if it's just dividend stocks in general or mutual funds or bonds. Comment down whatever you guys like to invest in. I'd like to see. Anyways, I hope you guys enjoyed today's video. Thank you so much for watching. If you haven't done so already, please like my video down below and subscribe to my channel so you can be notified when new videos come out. Also, just a quick reminder, if you'd like a free stock, use my Robinhood link in the description below. If you'd like another free stock, you could sign up for Webull using my link in the description. And if you'd like $5, you can sign up for Acorns Investing App and get $5 invested into your account when you sign up. Thank you so much for watching. I'll be posting 3 times a week on this channel. And as always, until next time.